In June 2023, Nvidia crosses $1 trillion in market value for the first time. 9 months later, in February 2024, it doubles that. 3 months after that, in June 2024, it triples it. Then on October 29, 2025, at 8:52 in the morning, Nvidia becomes the first company in the history of the stock market to be worth $5 trillion, more than the entire economic output of every country on Earth except the United States and China. A little over a decade earlier, this company was best known for making graphics cards for video games. That's what this video is actually about. Not whether Nvidia is a good stock to buy, but why almost everyone, including professional investors, keeps misreading what a number like 5 trillion actually means. Welcome to Atlas Capital, where we explain the forces shaping tomorrow in a simple way. But first, a quick disclaimer. This is not financial advice. Nvidia is used here purely as a case study in how markets price extraordinary growth, and how investors again and again misread the difference between a great company and a great trade. Most people believe that when a company hits a number like $5 trillion, it means the stock has become dangerous, that it's simply too big to keep climbing. Here's the problem with that plan. Market cap isn't a ceiling, it's a scoreboard. All right, but what is market capitalization actually? It's simple. Take the share price, multiply it by the number of shares outstanding, and that's what the market currently believes the entire company is worth. It's not cash sitting in a vault. It's not a guarantee of anything. It's a live vote, updated every second, on how much profit investors expect this company to generate for the rest of its existence. So when Nvidia crossed $5 trillion, that wasn't the market saying this company has arrived. It was the market saying, we now expect this company to earn even more than we expected 3 months ago. And that distinction is exactly where most investors get into trouble, because they treat a number as a verdict, when it's actually a forecast that can be revised in either direction, overnight. Think of it like a stadium scoreboard versus the actual scale in the locker room. A scoreboard tells you what the crowd currently believes is happening in the game. A scale tells you an actual physical fact. Market cap behaves like the scoreboard. It moves the instant sentiment shifts, long before the underlying business itself has changed at all. Nvidia's factories, its engineers, its chip designs, those move slowly, like the scale. Its $5 trillion price tag moves in minutes, like the scoreboard. Confusing the two is where most of the pain in investing comes from, so how did we actually get here? There are 4 things worth understanding, and none of them are about predicting where the stock goes next. The first is the speed. Nvidia passed $1 trillion on May 30th, 2023. It reached $2 trillion on February 23rd, 2024, 9 months later. It reached $3 trillion on June 5th, 2024, just 3 months after that. Then it took over a year to add its 4th trillion, hitting that mark on July 9th, 2025, becoming the first company in history to do it. And then, in under 4 months, it added a 5th. Before ChatGPT launched in late 2022, Nvidia was worth around $400 billion. In 3 years, it added the equivalent of 12 companies the size of the old Nvidia. That's not a normal growth curve. That's what happens when an entire industry, cloud computing, artificial intelligence, national infrastructure, reorganizes itself around one company's chips at the same time. The second is concentration, and here's the part almost nobody mentions. Nvidia's data center business, the chips that power AI systems for Microsoft, Amazon, Google, and Meta, now makes up more than 90% of its revenue. A handful of customers, sometimes called hyperscalers, account for the overwhelming majority of that. Which brings us to the uncomfortable question professional analysts keep circling back to. What happens to a $5 trillion valuation if 2 or 3 of those customers slow down their spending at the same time? Nvidia isn't just exposed to the semiconductor cycle. It's exposed to the budget decisions of roughly 5 companies. The third is behavioral, and this is the one that actually determines what happens to your money, not Nvidia's. Every time this stock crosses a round number, the same pattern repeats. Headlines call it the first trillion, the first 4 trillion, the first 5 trillion. Retail investors who miss the run see the headline and buy in near the peak of that particular surge. Not because they've done new analysis, but because the number itself feels like proof. Then, weeks later, when the stock pulls back, which it always does, those same investors panic because they bought the story, not the business. In the spring of 2026, Nvidia's market cap dipped from a high near $5.5 trillion to under $5 trillion in a matter of weeks. Nothing about the chips changed. What changed was the mood of the person holding the stock. The fourth is timing. And it's easy to miss because it hides inside a number that looks steady from a distance. Zoom out to a chart of Nvidia's market cap since 2023, and it looks like a smooth, almost inevitable climb. Zoom in, and it's a jagged line full of 10, 20, even 30% drops along the way, driven by things that had nothing to do with chip demand. A tariff announcement in April 2025, a single disappointing earnings call, a rivals product announcement. The $5 trillion headline is a snapshot. What the headline never shows you is how many investors were shaken out of the position during the drops that happened on the way to it. Let's walk through exactly how the $5 trillion day happened, because the sequence matters more than the number itself. On July 9th, 2025, Nvidia becomes the first company ever to reach $4 trillion, riding a rebound after tariff fears. Earlier that spring had knocked the stock down sharply. Through the summer, the AI infrastructure build-out keeps accelerating. By late September, Nvidia is already worth $4.5 trillion. Then in the third week of October 2025, CEO Jensen Huang takes the stage at the company's GTC conference in Washington, D.C., and tells the audience Nvidia has secured more than $500 billion in orders for its AI chips through the end of 2026. The next day, word spreads that President Trump plans to discuss Nvidia's Blackwell chips with Chinese President Xi Jinping, raising hopes that export restrictions to China could ease. On the morning of October 29, 2025, Nvidia's stock jumps more than 5% at the open. By the close of trading, the company's market capitalization stands at $5.03 trillion. It closes the day worth more than the combined market value of AMD, Intel, Broadcom, TSMC, and Micron put together. And the story doesn't stop there, because the market never does. By May 13th, 2026, the stock keeps climbing and Nvidia touches $5.5 trillion for the first time. By late June 2026, after a soft patch following its quarterly earnings, the market cap falls back under $5 trillion. And by mid-July 2026, it's back near $5.1 trillion, roughly where it was in October. Same company, same chips, same customers. A round trip through $500 billion of paper value in 8 months, without a single new product launch driving it. Now, I want to be straight with you about something. None of this proves Nvidia is a good investment going forward, or a bad one. Markets aren't always right, and a $5 trillion valuation has been wrong before. Just ask anyone who bought Cisco at the top of the dot-com bubble in March 2000, when it briefly held the title of the world's most valuable company before losing more than 80% of its value over the following 2 years. The size of a number tells you how much conviction the market currently has. It tells you nothing about whether that conviction is justified. So how do you actually apply this? The answer isn't to guess whether Nvidia goes to $6 trillion or back down to $3. The answer is to decide before you're emotionally attached to the outcome. What role a stock like this is allowed to play in your plan? If you own it as part of a diversified portfolio, decide today, while you're calm, what percentage of that portfolio it's allowed to become and rebalance mechanically when it drifts past that line in either direction. If you're tempted to buy in purely because of a headline about a round number, that's usually the signal to wait, not the signal to act. The investors who got hurt by Cisco in 2000 didn't lose money because they owned a great company. Cisco really was the great company its investors believed it to be. The internet did get built on its equipment largely as promised. They lost money because they decided how much to own after the excitement instead of before it, and had no rule in place telling them when to trim the position back down. A rule you set while calm is worth more than a prediction you make while excited, because the biggest mistakes with a stock like Nvidia don't come from picking the wrong side of the AI story. They come from letting a headline number make a decision that should have been made calmly in advance. Nvidia went from $400 billion to $5 trillion in 3 years. It also lost $500 billion of value in a single month along the way. Both of those things are true at the same time. And that's the part the panic never remembers. If this helped you see the $5 trillion number differently, hit like and subscribe for more of this every week, and let me know in the comments. Do you think Nvidia becomes the first $6 trillion company? Or does something else get there first? And that's all for today. Thanks for watching, and I'll see you in the next one. Bye.